After a very, very long time, we are having a power series purely by public demand. Today, we are not supposed to be working, but then the public demand has been so huge that we made our office open and we said, let's do the power series. So, this is the first power series of news Samvat here, and hopefully not the last, provided Mohit gives time, because Mohit is always busy as compared to me, actually. So what I'm going to do, so the line of action would be, I will briefly talk about how do we see the market. There are things which are happening very drastically. Sometimes you don't realize things happening on a daily basis, but when you expand that time horizon, things look a little different. Just to give you a free example, gold and silver both were looking very, very interesting 1 month before. But if you look at the data, which really surprised me also, the gold after touching $4,350 per ounce is now today below 4,000. So you can see in about 7-8% decline which has happened from the peak, which is in last 1 month I'm talking about. The silver after touching $52 per ounce is now at $48, almost near about 10% decline. And the best part or the worst part, Bitcoins in last 1 month is down by 17%. The reason I'm talking about this, the assets class which were in demand, they have started seeing some kind of a retreat. Now what that basically means that the assets which were in demand are going down, and the assets which were, India has been one of the worst performing market in 2025. Everyone knows about it. I think we are going to see a shift in that's going to happen. And that's going to make me extremely bullish on the Indian equity market. There is a very famous saying that how should you, the whole story about US is AI, and AI, nothing else but the AI. And there are three, someone said that there should be a 3 checklist for you to understand whether it's a time to get into AI or it's a time to get out. Now don't get confused, AI as a business case and AI as an investment theme. Both are different. So people normally get confused with AI as a business theme is going to do extremely well, whether we like it or not, am I right? But AI as an investment theme, I'm going to think a lot of things. And there are 3 things which is a checklist as a fund manager you should put in. Number 1, whether people are fearful or greedy about that sector. And today people are greedy. Number 2, how easy for you to raise money if you are from that sector. It's extremely easy. And number 3 point is a very simple, are the valuation nosebleed or dirt cheap? And we all know it's a nosebleed. So if I look at 3 out of 3, the sector looks, the upside potential looks extremely difficult from this level. But having said that, now why am I saying so? Because the AI is a theme which has done extremely well. And one reason India don't have actually a AI story to really play out in a real sense. And that's why the flow, theme which was playing out globally, India could not participate because we don't have a really rock solid AI story to talk about it. And that's the reason India did not participate. That story is going to take some amount of headwinds. India could emerge as a winner. Very quickly, I'll talk about few things and then we'll open the floor. The idea is to have this power series taking more questions so that it becomes more interactive. But before I begin this webinar, there are important disclosures. I want you to listen to me very, very carefully. Number 1, whatever the data I'm going to present today is only for your education project. There is no way there are investment decision directly or indirectly. So please remember that. Please consult your financial advisor before taking to any conclusion about buying or selling stocks. Number 2, this is a document basically is only to, there is nothing basically to offer for sale or buy. It is no solicitation for particular company or a particular sector. Remember 3, you are solely responsible for whatever action you take based on this webinar. We are not, it's purely an education purpose. Number 4, this document has a lot of information which is confidential. You are not supposed to distribute this to anyone because it will be a legal offense in case if you do that, because what we have realized is that our data being used, repackaged and circulated as their own data, which is not fair. Last but not the least, basically the document is only for the information purpose. As I told you, it is not for the public distribution. Don't recirculate this, don't redistribute this without our prior consent. And this is again, last but not least, I said this is no guarantee that whatever information we are saying is, we believe it's reliable and true, but please you do your own due diligence with this. Very quickly about the Indian markets, I think things are shifting very, all know that October turns out to be a very good month for the Indian equity market. In fact, India did better than S&P 500 and Dow in the month of October. That's for a change. Normally India normally has been a laggard as compared to the US market. And Indian rupee also appreciated in the month of October against the dollar. In other words, in dollar terms, Indian equity market also did well as compared to the US market. Of course, Nasdaq did well because of AI story. Number two, FPI has come back very strongly, almost about 17,000 crore, 15,000 crore they pumped in, and we do believe that story will continue purely because of growth in earnings coming back. Number three, if you look at in Indian market, despite this rally has not been so broad-based in the month of October, the undercurrent has been basically little warming up even for the mid and small cap. So what we believe that Indian equity market should do well, and that should be a broad-based rally. So normally any rally which starts, normally starts with a narrow and slowly and steadily starts basically percolating down to the mid and small cap also. So we believe that the rally will become more and more broad-based, and the volume which has been less than 1 lakh crore in last 4-5 months, I think we are going to see this broad-based rally getting broad-based, and because of that volume going above 1 lakh crore. Indian economy seems to be in a very good shape. The reason I am saying so, even though the fiscal deficit is wider in the first half, purely because of government of India spending more than what they did last year same time because of the election. Number two, the RBI gave a very rich dividend to the government of India that will help to reduce the fiscal deficit near about 2.69 lakh crore as compared to 2.11 lakh crore. Remember, 4-5 years back, 1 lakh crore was a very, very big amount. Today, 2 lakh crore seems to be a normal which has happened with that. And the government spending is happening increasingly. I think that will have an impact on the economic activity. We all know that government, that manufacturing PMI data which came out in the month of October has been quite good actually. CPI inflation 8-year low. Even though SBI in his con call said that they don't expect rate cut before March, we strongly believe that there will be one more rate cut happening in the month of December from the RBI, purely because the inflation data are very, very low. In fact, the RBI own measures of 4% plus or minus 2, we are below that 1.54, and we don't expect inflation to go up purely because of crude has been very, very benign. The advanced tax collection grew by 6.3% till 12th October, this despite rebate given by the government where you don't pay any income tax up to 12 lakh crore. And the second thing, the advanced tax collection from corporate has not been so robust purely because the earnings were not so great. But we do expect, and the number that has come out till September has been extremely good, and H2 for FY 2026 is looking extremely good. That will start reflecting. There's one good news which has happened, and I strongly believe this will get this one, that STT, the logic for applying STT has been challenged in the Supreme Court on the ground that you need to pay STT despite you are losing money on that trade. Now the whole purpose and the basic thesis which while the STT was introduced, because there was no long-term capital gain was zero. Now Government of India introduced the long-term capital gain increased to 10 to 12.5%, but STT remain. It has been challenged in the Supreme Court for some reason before budget, which is just 3 months away. If the Supreme Court does not come out with this, there is a strong probability that budget itself will remove STT from this one. So in other words, it's a very good measure that's going to happen. One reason is very simple. The government realized less the taxation, better the returns that you can make, better the income, right? Because the more compliance and better growth in the market. So that's a very positive thing which market is not talking about, and eventually they will talk about. And of course the Bihar election, don't expect 6th November, that is tomorrow, the first phase, and the 11th November, second phase will going to happen, and counting will happen on November 14. It's a one-day event for the market, even whether NDA wins or the opposition wins. Okay. India's GDP has been revised upward despite the tariff, not only from domestic agencies but the IMF 6.6% now, and FY 2027 6.2. World Bank also went on very similar line, 6.5%. So we should see somewhere about 6.5 to 7% kind of a GDP growth, which is happening. But a major event which happened, which people don't talk and appreciate, Google is investing 15 billion in India on an AI investment, and this is going to happen and this is a major investment outside US despite US tariff on India. I think that's a big investment. Of course, this will happen in the next 5 years, but it's a very big thing which is happening for Indian economy. Internationally, very quickly, the oil prices, which is a biggest detrimental in the forex outflow, it continues to remain low. And OPEC Plus, because they want to increase the market share in the global supply chain and to take on US, has increased 1.37 lakhs barrel, which has been happening every month. On Sunday, there is another meeting of OPEC Plus, and we should see another similar kind of a production hike, which is going to happen. India's crude basket, which was near about $69 per barrel in the month of September, came down to $65 per barrel, despite the US putting a sanction on two US, the Russian-based companies, Rosneft and Lukoil. And at the same time, the EU has put a ban on LNG imports from Russia by 2027. So whenever the crude is low, it's good for the India purely because of less demand for the forex, less pressure on the inflation, and when there's a less pressure on the inflation, RBI has a reason to cut interest rate. Second thing, the Chinese economy, of course, the Hamas, Israel, still it's a little fragile, but there is a truce. But the Chinese economy is slowing down. The Q1 GDP 5.4, Q2 5.2, Q3 4.8. What does this mean? That the US, the Chinese market did extremely well in 2025. I think somewhere some money will create, book profit will happen, and that money can come to the Indian market. So that's a thing happening. Very quickly to the US market, the government shutdown. Today we crossed the highest, like the 2018 was the longest the shutdown. Today we crossed that shutdown. I think how US is behaving is a little this one. Fed did another 25 bips rate cut in the month of October, but there is no clarity whether they will do it on the 10th December or not. Trump and Xi meeting happened, not too much excitement, very big talk. Trump said 12 out of 10 rating, but still the details are little not very clear. So we don't see much of a positive impact both for US and the China. And the US market, the single company Nvidia now has a 5 trillion market cap, while the India's total market cap is 5.27 trillion. So you can understand, you have an option to buy complete Indian market, or you can buy one Nvidia. You can you can realize. FPI, which I said, turned positive, 14,610 crore, which has happened after a very long time. That's a very positive thing which has happened for the Indian. GST collection 4.6% Y&Y, despite the reduction in the GST or the regionalization. I think it's a very good strong thing. A lot of pundits suggested that we will take a beating on GST collection. I think 2 lakh crore, I think on a monthly should be now a new normal rather than about 1.5 lakh crore. So I think that's a new normal that we are seeing. The reason this is very important, because GST collections are pure and clean data. Why? Because people have paid the GST collection, the government received that GST collection, which is a very pure and clean data on this one. Crude oil price, which is is always been struggle for India. $89 per barrel in last April 2024, we are at $65. So you can see the quantum of fall that has happened. I do expect this price to, in fact, EIA has predicted that crude on an average in 2026 would be $58 per barrel. So we are further looking at about 10% decline, which is a very good thing for a country like India. And OPEC Plus is going to keep increasing this one. Corporate results for a change, a surprise. They're up by 16% Y-on-Y. It's all the more reason our earnings for FY 2026 will get revised upward post 15 November and even for FY 2027. There are two things which is happening in the Indian market. One, the growth in earnings, and the second thing, the liquidity. SEBI recently did a study right now and which said that India will get new investors of near about 5 crore in next 1 year. Okay, household. Just to give a comparison, there are unique investors in the country based on PAN is only 12 crore. So we are looking at huge inflow coming in from the domestic investors, FPI coming back. So I think India will have a double engine. वो बोलते हैं double engine की सरकार जैसा double engine का growth. While liquidity is going to go up, and second thing, the growth in earnings are coming back. Last 1 year, Indian equity market did not do well purely because of the earnings growth were little challenging. both things are happening simultaneously. That's going to make Indian equity market extremely bullish. So what do we expect Indian market very quickly? More in monetary easing policy going to happen 5th December. We do expect one more rate cut coming in from the government just to boost the economic activity. And second thing, the RBI will do 5th December rate cut, but Fed is unlikely to do that. That's what they said. Market OPEC will increase the production, which will further ease the pressure on the crude oil price, which is beneficial to India. And the last but not least, the geopolitical situation. While Israel-Hamas truce is there, the Russia-Ukraine tension continues to increasing, and we don't know what's going to happen, and that could be one challenge. That's it. But day before yesterday, Trump made a statement. Today, White House made a statement that we are very close to improving India. So I think one thing which has happened, India did not do well in 2025 because of tariff-related thing. Today, the tariff-related thing has limited downside, but there is a huge upside for the if there is a trade relation has been come to some kind of a resolution. Finance Minister said very clearly we are not going to get bullied down because Indian domestic. So that message has gone loud and clear to the US market, US government. It has to be on a fair terms. So that's what's going to happen. So foreign investment flow, we believe now is going to be sustained going forward. And rupee stabilizing is another factor that FPI will become more and more strong and will come back. So overall, we believe that the market will be going upward because of monetary policy, FPI inflow, and the trade progress. In other words, we are expecting bull market ahead. Okay, and that's a thing. Large cap is right now started doing well. It will further go down to mid cap and eventually to the small cap. Mota Indian equity market is going to do extremely well. We stand by our blog. If you remember, in the first week of September, I wrote 18% growth in Nifty 50 in terms of price appreciation, and we stand by that despite 5% gain or 4.5% gain which was made in the month of October. We continue to maintain that the rally has just begun, and some of the assets class which were the darling of the investors are seeing some kind of a retreat. That money will eventually come to the Indian equity market. And before that, we open the floor for question answer. I'll hand it over to Mohit.
Well, thanks a lot, Sunil. This has been our practice that over the last years of doing webinars, we've always had the ability of sticking our neck out and giving what our view is, not predominantly talking about it's looking good or bad. There have been times where we have said that the market looks to be in pressure in shorter run, and there have been times where we have come out and told you that we are maintaining a bullish outlook on the market. In fact, I was in my webinar yesterday on MOJO Infinity monthly review. I had echoed very similar views out here. I think another thing that you would see and something that you must notice is that investors have a affiliation with certain asset classes, and when they start doing well, their love grows deeper onto those asset classes till the time that that love converts into hate. I'll give you an example. I know some investors very closely who had taken a large exposure to gold and then to silver. In fact, they went on to then not just buying ETFs but buying gold mines here and there, and they were all out. And suddenly, when I spoke to them, they had almost a 70-80% allocation of their investments into one asset class. Now, we've seen that the whole asset allocation paradigm works completely detrimental if you're overweight on one particular asset in that way, unless and until you have a very proven long-term track record of that. But if you even have that, you will say that, this asset class has given me on an average 9-10% or maybe 11-12% depending on which asset class you're talking about. But investors need to also have the ability to stomach the short-term volatility that may come with overexposure to one asset class. According to me, once we look at all the data that is coming in from the corporate earning as well, I think we are back in the risk-on zone. The risk-off strategy, which was playing well over the last 3-6 months, is going to subside. And as far as the equity market is concerned, we are back in the risk-on zone. And the risk-on zone, trust me, can be very crazy. As Sunil is saying that he's expecting a 18%, but market doesn't move. If the market moves 18%, then there are smart stocks that one selects that can move even 100%, can even go 50%. So the stock selection approach then becomes paramount, because once you get a one-way good bull run, despite not being ups and downs, if you get it, then the potential of revival of a lot of things becomes more comfortable. So if you are looking at your allocation balancing, this is a good time to look at allocation balancing, to go overweight on equities. Most of you are Indian investors, so I can only tell you about Indian equities, but it is a very good time that you may want to get overweight and reap the benefit now. So with that, let's open the Q&A and straight jump into it.
Hari Krishna sir is saying, good evening. Is there a DI bubble stepping up in Indian market? Thank you. So what is the DI bubble? I don't know. See, this money which is coming, I don't know whether you are aware, but in NPS from 1st October, they've been allowed to invest more in the equity market. Something similar is happening with the insurance sector. The SIP flow in the month of October has been the highest. Okay, so there's actual money coming in, and remember, we are just, so if you look at, I think sometimes हम लोग ने कभी वो बोलता ना, हरियाली देखी नहीं तो सूखा देखते थोड़ा हरियाली देखते लगता है बहुत तकलीफ है अपने को. I think we are just 12 crore unique investors in the country. Yeah. The mutual fund, you'll be surprised to know that there are only 5.4 crore unique investors in the mutual fund. Assume that guy who has invested in the equity market, which is 12 crore, they basically start investing in the mutual fund. So 5.4 crore will become 12 crore, so double ho jayega. So I think this DI is definitely not a bubble, sir. I think there are two things which is going to happen. Number one, the number of investors is going to get expand within the DI. The NPS will increase allocation to, now you can have 100% allocation to NPS. I don't know you are aware or not, which has happened from 1st October, where there was a previously limit which has been capped. Now you can have 100% allocation to this one. Insurance companies are increasing more and more to the equity. The number of investors are increasing. Not only the SIP numbers will go up, but the quantum of SIP per will go up. And if you look at in 2025, the direct investment in equity was only 20,000 crore. In 2024, it was 1.5 lakh crore. Of course, the obvious reason the market was not doing well, so there is a human tendency not to put it. The moment you see the market going up, the same investors who have stayed away and invested in gold and silver will make a comeback. So on the contrary, sir, I don't think we are in a bubble. I think it's just beginning of this one. So huge inflow will come from the domestic investors.
Sir, sorry, Sunil. According to me, when I look at this question, according to me, the biggest reality of the Indian market is DII. The biggest boon of the Indian equity market is DII. I mean, if you say FPI bubble, I can still understand that, because that's hot money, cold money comes and goes out, right? DIs are committed to investing out here. The growth, you are looking at not even 4-5% of Indian population to be investing in mutual funds. That number is so low. This number is going to go out of the pavilion in the next 5-7 years. And we are, it's not that we are going to be an exception. In fact, we are currently an exception as one of the economies which has the lowest percentage population investing in equity markets. Some instruments are not highly regulated, right? So according to me, this is going to be one tool with us that is going to play not for just our generation, but our kids' generation as well, because this is the strength and this is the dedication of a country to keep investing within the country, and genuine investor and regulated markets. So please don't be scared of that at all.
There's one more data point. As on today, the India household savings more into physical assets and less into financial assets. If I have to again come in front of you 10 years down the line, we would see the complete reverse of that. So the more financial assets would be there, as compared to the physical assets?
Be very careful about real estate because I don't know if Sunil has a view, but my view on real estate is bearish at this point in time. So if you're trying to crack a deal now or in the near run, be very, very careful. The prices are extremely exaggerated. And I would not be surprised if I see a 30 to 40% correction in prices from the current levels. The supply is out of whack. The prices are equally more exaggerated than the supply. This is something that has been played well for a long time, but if you're a real estate investor, please be very careful.
Today, Amitabh Bachchan sold 2 flats in a suburb of Bombay in a very premium society called Oberoi Exquisite. Okay, it's all in public domain. It's not that I'm privy to this information. He bought 2 flats in 2012 or something, or 2014. 8-9 years, he made 48% return on that deal. Officially, the data is available. So if you look at the CAGR, had he invested this money in a bank FD, he would have made more money than the real estate investment. Let's move on.
Yeah.
Satish sir, what is your view on the auto commercial vehicle sector, trucks, tractors and ancillary stocks in this space? Will GST reduction can bring momentum here? Definitely, sir. I think there are a couple of things which is going to play out for the sector that you mentioned about. Number one, the buoyancy in the economy. Rural economy does well. Whenever the rural economy does well, this commercial vehicle and trucks and tractors does extremely well. And number 3, as you rightly said, is the GST reduction. On the top of it, Government of India is going to keep increasing the infra spend. So that's another thing. If you happen to listen to the Polycap con call, which they said that even private capex seems to be making a comeback. Yesterday, Tata Consumer Management said that even urban demand is making a comeback with the FMCG space. I think that there are various things which is happening. So it should. The only one danger that we need to be all aware about is a metal prices. Now, a lot of these companies do consume metal as a raw material cost, and the metal prices are going up. So, how much efficiently they are able to pass on that? We need to see. But otherwise, it's looking extremely good. And another thing which I was saying is a crude derivatives and crude oil, crude derivative price, which is also beneficial for the auto ancillary sector. So I think that's another reason. So I personally believe it should do well. Again, is a disclaimer, it's only for the education purpose. Please consult your financial advisor before buying or selling any stock from any sectors we are discussing about.
Mr. Rajkumar ji, dear sirs, once we make a portfolio of selected Mojo stocks with buy and strong SPY, at what frequency we need to visit my portfolio of about 7-8 lakhs, having 6 stocks. Sir, if you make this portfolio of buys and strong buys, I would strongly advise you to store that in your portfolio tracker section that we've got. Once it gets stored out there, then if there's any call change that happens, we will be informing you. Now, sir, sometimes when we send you a call that this call is strong bias changed to buy, that doesn't mean that you need to sell, right? You need to sell only when the call goes to a sell. So you have to be very careful. You don't need to monitor this on a day-to-day basis. I don't think so. Calls change like that on a day-to-day basis, especially if it is a strong buy and buy. There are 2 ways in which you will get information. One is that if you store it in your portfolio, you will get a notification email that this stock has changed grade, and you can optimize your portfolio and then see which is the next stock that you can buy, or maybe that choice is yours. The second is that if it is a Mojo 1 strategy, whether it is in a Mojo stock or turnaround stock or hidden turnaround, we send you intimation as a strategy that this stock has moved out of Mojo stocks or moved in Mojo stocks. Having said that, there are certain times that certain stocks can move out of Mojo stocks, but they may not be a sell still, right? So be very careful because this is just a list. This is not a Mojo stock is not a portfolio. Hidden turnaround is not a portfolio. If you want to create a portfolio of these, then there is on Mojo Infinity, we have separate strategy. That is the Mojo 1 strategy that you can put money in and you can manage it out there, where we select which stocks to invest out of the 30-40 stocks that we have across these strategies. But you will get a strategy-wise intimation in your mailbox, and if you store it in your portfolio, then it is much better because then we start monitoring, your quantity and everything, and we can guide you much better out there. I hope that answers Rajkumar ji.
You forgot to mention important event that Indian women in the World Cup victory in the cricket. You're right, absolutely right. I think what an amazing victory, and I think it's going to set a new standards for the women's cricket going forward. You're absolutely right, sir. Sorry, I missed it actually, but I did mention I was watching the match.
Mr. Sir is right, because when we are moving from a bear to a bull market or a flattish to a bull market, then we find every reason that the market is moving because of that. So for all you know, the bullishness in the market will be because of the Indian Women World Cup victory. But what a proud moment for all of us. What a proud moment to all of us as a country.
Vatsalya is saying probably GDP growth rate does not match with the earnings of Indian half-yearly earnings. Do you agree? So, sir, try to understand what is GDP. For example, GDP consists of various unlisted space also. For example, agriculture. What farmers produce doesn't get captured in the listed companies' earnings growth. Am I right? So, GDP is what's happening in the economic activity, and that's why I keep saying, look at the GST collection, because GST collection is a real data where someone has paid GST, which has been collected by the people and then in turn has paid to the government of India. Actual money flow हो रहा है, कोई notional नहीं है. Am I right? And earnings, I think, if you look at now, let's look at this way. The last year, the GDP nominal GDP growth was near about 10.5%. I'm talking about FY 2025. Corporate earnings growth was only 5%. So sometimes what would happen, there will be lag and there will be lead impact which can happen in GDP growth. So if we are saying that 15% GDP earning growth आया हुआ है and economy has not grown 15%, that could be because of some adjustment which has happened in GDP last year. The GDP grew by 10%, but earnings did not grow. So that kind of adjustment will keep happening. But eventually, if you look at the block of 5 years, the nominal GDP and corporate earnings growth would be very similar, maybe 100 bips, 200 bips here and there. That's how it works. Nothing special done by tech companies in AI in India. So how do you see the future of tech companies in India, especially when US is not going to support tech companies? So I may have a different view. Mohit may have a different view. So I was on CNBC last Thursday, and I did mention that I'm not so gung-ho about the IT companies because the things are happening very fast. We all know TCS asked the employees to go, and I'm of the opinion, this is my personal opinion, that this will not be the last asking layoff which will happen from TCS. That may go forward because AI is going to change whether we like or not, things. And how quickly and how smartly we are able to capitalize on AI is the things to watch out for. So I'm not at this point of a bullish at this time on the Indian tech companies. And now it is also a challenge for the Indian government also. Why? If these employees do get lose their job, they need to find somewhere, am I right, the job, otherwise it's going to impact the consumption, it's going to impact so many things. So right now I think it's a developing story. Should we be getting overexcited with the Indian IT services company at this point of time? The answer is no. So I'm not so bullish on the Indian IT services company. How quickly they adopt, what kind of a platform they come out based on the AI stake, we need to wait and watch. Of course, some of the companies in their con call have been saying that they are doing work on that, but I think we need more proof of concept there. As and when we get the POC there, I think we will get more convinced. At this point of time, would I be comfortable putting more money in IT services companies? The answer is no. Mohit?
I have a very, very harsh view on the Indian IT sector. I think it is in a big problem. If you look at the whole focus that is coming in, which is Make in India, more on the manufacturing side, it's because the services side is doing well. We should start doing more in India or manufacture more in India. That is fine, but the world is going in a different direction altogether. I mean, this AI disruption, for all you know, is done by Indians sitting in their different companies. But Indian companies are becoming more a slave of these foreign companies where we are just providing cheap labor. There is no, I have not seen some huge innovation on AI or anything on technology per se coming out from this country. And that is something that we need to take very seriously, not just make in India, but also, make in India cannot be only manufacturing, but it has to be even tools, serviced tools. It is just about not putting plants out there, but having the capabilities of creating tools that can help help in the future. And I think we are pathetic as a country in that. I'm so sorry, but because of the leaders in the tech industry, the people will lose their jobs. Because they have not been groomed, and that there's no vision to apart from just putting up a service center to service companies in the US, and you're making money over last 15-20 years, and that's a good money. You just have to look at more and more contracts increase, or do a price level change because of dollar and dollar adjusted pricing and all of that stuff, and to keep servicing call centers, cheap labor. According to me, as a country, we need to have some teeth. And we need to, especially on the service sector, on the AI side of it, and we need to make some bold steps forward and have some visionary leaders in the tech segment to say that we are going to produce. In fact, government is making more noise. Bless the government. They are making more noise on AI than any of these seasoned tech companies don't have any guts to come out and say that we'll create one of the best tools in this country. I'm really, I would say, beyond bearish. I'm very upset at how we've lost the race. We are today using AI tools, and I know that the tools are creating. I'm not even going in terms of what kind of work they're doing, but there are version controls that are coming every 15 days. I can tell you that 30-40% of people who are doing that are Indians sitting there. But why can't we create something out here? And my view on AI is going to change things in the next 5-10 years. I mean, I've been reading a lot, I've been studying a lot, and I personally am very bullish on AI. I'm very bearish on India, benefiting. We will be paying for this. It will become maybe the biggest market who's paying to these AI tools today. In my organization itself, I think I'm looking at my bills going up on payment to US companies today, right? And then where the biggest, and we say that the brightest brains are the Indian software engineers, poor guys are going to lose jobs because they are pathetic, non-visionary leaders. I'm really sorry for this.
Yeah, the only difference of opinion I have with Mohit is that India will create, so it's not that Indian IT services companies will that, but I think a lot of apps will get created based on the using AI as a it's like,
you will use it. I'm saying that we have to, as a country, today MarketsMojo, we made MarketsMojo as a innovation in the world.
That's true.
Right, that we started doing. It is not difficult to say I'm going to create a category. We can be followers all our life. Right, we can say that, okay, now AI has been created, now we'll use it. Obviously we'll use it. We'll make efficiencies better, we'll make productivity better. My only view on this is that why is that we were not there to create it? Why is that we are still not able to create it? It's been 2 years. Why is that we don't have a NVIDIA in India? A listed company like that, where we are talking about NVIDIA's market cap crossing the GDP of this, or crossing the market cap of this country.
GDP is upar hi
hai, right? Why is that? And you talk about the best bet, and we talk bullshit. We say that the best minds are Indians. I'm sorry, we may have the best minds, but we are still in a very, we are very, scared of creating things and taking the risk, entrepreneurial risk to create different things.
So how we should look at it? The way someone else.
I'm very volatile on this subject, so I'm really sorry. I hope most of the tech companies CEOs listen to me on this one. And stop doing the call center jobs, and stop doing these jobs of servicing US companies by cheap labor sitting in India, because that cheap labor is going to lose their jobs now. Definitely,
I agree with that. Only thing, I think we need to be a little smarter. To like someone else produce the electricity. How do you use the electricity? It's got India should look at it. The way Jio basically giving a cheap data pack and how the complete UPI came into existence. I think something. So what is data is an AI. What is electricity is an AI, and how do you use that AI to create a value proposition?
I fully agree. You don't know what is the AI bill that India is going to pay to the US. I mean, at a company, at a corporate India level across. I mean, we before we started this webinar, we had somebody who came and who was meeting us. He's into he's into loan recovery. That guy used to have 70, 80 people, now he has 7 people. Right? And everything is automated. And he's got 4 tools that he's using and he's paying 4 tools. So I'm saying that we are going to, being the best brain in this, we are starting to go to use of this, which is absolutely fine, because once we've not created it, we're going to use it, right? But I'm talking about that this is just the start, because there are going to be tools that will blow your mind that will coming in, and we've already missed the start. At least have the courage to say that, okay, now we are going to catch up and we are going to create something out there. I think make in India in service sector should happen rather than just on the manufacturing sector and product sector. Sorry, let's go on to this.
Yeah, because we'll keep on debating.
More volatile on this. Yadav ji, hi Mohit, don't want you to promise anything. Understand that the team has projects planned. Just wanted to know how are the new things in. Are there any new things in the mind of MarketsMojo? Yes, sir. We are a lot of new things are happening. We are going to create a markets page, a global markets page that is coming up, which is going to be huge. We are in the next phase. We are trying to create a screener, and you will forget any other screener in the market once you see that screener. And we are also going to have a global allocation strategy that we look at now that we are actively looking at 21 markets. If anybody wants to look at where the overall allocation, global allocation should be, we are creating that particular piece. We are also in the process of launching some more portfolios on Mojo Infinity. And I may be the first one to say out here, but we may also launch another scheme in the PMS side. So there's a lot that is happening. AIs, we've adopted AI completely. We don't do AI to look at our IP. That is not something that we do. But in our various other processes, we've deployed AI. And I must tell you that, some of our people lost jobs because of AI as well. We've in fact done a recent restructuring where a lot of our people lost their jobs because, and this is despite repeatedly trying to train people that this is going to be and it's a very, very sad moment for us. MarketsMojo is a very sad moment that people have lost jobs because the AI is just cut down. I mean, what I could do in 1 month, I can do it in 2 days, and with minimalistic errors and all of that stuff, and we don't need so many people anymore. And I'm the TCS story or Infosys story is going to happen across the country, which is a very, very sad stage, and that's the reason I was very agitated on the previous this thing. But a lot of new things coming on MarketsMojo. Trust me, in the next now you will see a launch, a relaunch, and betterment in the next say every 15 days. You will be able to see something happen.
Ye dil mange more.
Yeah. With that, there is this. Since you're asking about that, we are increasing our prices. If you just show me the slide, we had a Diwali offer that is going on that we are finishing now. MarketsMojo is going. MarketsMojo is going modular, and we are increasing the prices now to a 1-year price of 19,999. Going forward, this change will happen in the next maybe some few days or something, maybe a day or two. You are today. We did a Diwali offer where you were getting a 2-year price, 2-year for the price of 1. And that price only is 12,999, which will go, and you're getting in 12,999, 1 year plus 1 year free. So it is a 2-year pricing. Moving forward, the price of this package today is, almost 38,000, which you're getting at 12,999. So for our investors who only love to extend during offers, this may be a good time for you to do it before we end it. This is Diwali offer. I think tomorrow is the last day we'll be ending it. Maybe tomorrow is something, or maybe midnight of today is when we are ending this. If you guys want it, There is a link that is there that you can use it to pay, but do it as soon as possible. You can extend multiple times as well. So you can buy this package 2 times and you will get 4 years in say 24,999. So that is something that you can also do. A lot of our investors, buy 2 or 3 times so that they get 5 years, 6 years at a discounted rate. So that you can do. But we are going to be closing this offer tonight or maybe tomorrow. Let's go to the next question. Kiritji, how do I pay subscription of 12,999? There is a link that you will find in this webinar. You can click on that link and you can subscribe. If you want to subscribe more than once, then you can go to the site and you can subscribe more than once as well. You will have that link in the chat box. So if you want, we can also send you the link. So, but try and do it before the midnight today. Hare Krishna ji, one has come back. 2 more questions, Sunil sir. I am adding Sunil sir out there because Sunil sir is more educated than me on this one. Is US market overvalued? And please throw light on recent US loan crisis, sir.
So I definitely believe that US market is overvalued. And see, if you look at this, the rally that has happened in the US market is driven by only Magnificent 7. It's not that each and every US based companies have participated in this rally. So people keep asking me, is there a bubble in the US market? The answer is no. Should we expect a crash in the US market? The answer is no. Should we expect correction in the equity market? Yes. Answer is yes. So some of these companies which are commanding a rich valuations, somewhere the AI ROE or ROI will come into picture, and then you will see some amount of a profit booking happening, and that will happen. So yes, US market overvalued only to the Magnificent 7. Of course, the US market commanding more richer valuation than Indian equity market, which normally doesn't happen. Am I right? And I'm talking about 1 year forward earnings. So yes, it's overvalued. And recent loan crisis, so I think somehow US has got a habit of and JP Morgan CEO kept saying that we are going to face a lot of problem, but somehow US has been able to find a way out. So I don't think it's a US loan crisis is going to blow up significantly, and we are looking at kind of what happened in subprime crisis of 2008. I don't think that's going to happen at this point of time. So the answer to the first point, yes, but limited impact. Answer to the second point, I don't think it's an event which will unfold and it can impact the market very badly.
Sarangji, please suggest which one is the best strategy for 2026, hidden turnaround, reliable or momentum now, depending on current market position. Sir, I did a presentation a couple of days back or maybe last week, I think on Friday, which was a full MOJO 1 review. What we've seen over a long period and over a shorter period, the strategy that is working very, very well is the reliable stocks strategy, which is very close to the MOJO stock strategies. That works very well out there. The other thing that we have seen is even in a bear to bull move, the hidden turnaround works very well as well. But having said that, all these are with disclaimers that we can go completely wrong in this. This is just quoting from what we've seen on the mega data side that we've seen our strategies of the trends. I think hidden turnaround and reliable and MOJO stocks will look very good. Now, typically, if the market is in full momentum, then momentum now starts working well as well. I won't hang my hat on any one of these, but I think, you need to maybe, one of the things that you can do if you're confused on this is that all these 3 strategies go into one of our infinity portfolios, where we select in between these 4 strategies, we look at maybe 2 stocks from each strategy and select basis that. That strategy is doing very well. If you want, it's known as the early discovery strategy, which you can go to mojoinfinity.com, which is www.mojoinfinity.com, and choose the early discovery strategy. The early discovery strategy has a selection from MOJO stocks, hidden turnaround, reliable, and momentum now, and it makes a 8 to 12 stock strategy out there, depending on which strategy is doing well. and then we can select the stocks out there, and you can execute those stocks because we don't execute on your behalf. You can choose any broker and you can execute. That will be a much more better way rather than hanging hat on any one strategy, I would say. Yeah, Mr. Mahendra ji, M K Srivastava, if I want to invest in a stock today, how do I figure out whether the market is bull phase or bear phase? Sir, मैं भी 30 साल से यही कोशिश कर रहा हूँ. Phasing of the market is very tough to do. We are planning to, Sunil has promised me that we are going to work on this and try and look at the past phases and see what were the main traits of those phases, and can we with confidence say we are in this phase currently. This is one of the projects that we will take up, but as of right now, I don't think so there is any scientific answer to this one that I can give you. If Sunil has one answer, then maybe I can learn, but I don't have an answer to this.
So, sir, in the bad market, some stocks will do extremely well, and in the good market, some stocks will not do well. So I think the reason for you to invest in that company has to be very clear cut. It's not a question of bull or bear. Okay, am I right? If you think this company you are going to invest and because you have a strong reason because of company doing well, or there is a great tailwind that sector is going to do well, please go ahead, because those company will not have any problem in terms of bull or bear phase kind of stuff. You look at some of the companies which we own in our PMS also, like for example Bharti Airtel. Market did not do well, but it did extremely well. So sometimes we want to correlate the company with the market phase. Makes a little sense actually. So if you want to invest a stock today, please find out why you want to invest in the stock, not because market is going to do well. The fundamental reason for that company to do well, you should do that. In fact, yesterday I was attending one event conference, and I might come across some of our MOJO and PMS members also attending that event. And one of the leading AMC fund manager was asked, in this market, where do you see the sector which is doing well? Why do we, if market does well or not, because everything looks very, very rich. I might have on the valuation. He said there are many sectors which are not participated only in even though the market lags 4-5 years. So one sector which he mentioned about the insurance sector. Last 4-5 साल में post COVID the market, Indian equity market did well, but they did not participate only. So
and the sector did very well.
But sector, so that's where you need to look at it. The reason why you want to invest in that company should be very clear cut. Don't get confused with the bull phase or bear phase, because see problem क्या होता है मालूम है investment में? We don't have a clarity of thoughts. We are too confused in our thought process. Please put down the guy who makes money is the guy who has a clarity of thoughts in this one. And I give you another interesting example. So I met Paddy Upton yesterday. He's a mental conditioning coach, and he is the guy who was responsible for India winning a World Cup in 2011. And he said one nice thing. Everyone has a bad things in life, like everyone has a self-doubt and everything. He said, the moment you have a clarity of thoughts, and he gave a very classical example of Jack Calais. Basically, he's also from South Africa. 17 months in a row, he did not score a single century. And he had a problem because he lost his father, and so was some family issue. And he said, I had a conversation with him and I gave him just clarity of thoughts. The next series which happened with the West Indies, in 5 matches, he 5 test centuries scored actually. The same guy, the change in. So what I mean to say is that getting the clarity of thoughts, the moment you have a clarity of thoughts, the rest of the things will fall in place. The problem happens when we are confused in our strategy. That's where the problem happens.
Sivathe ji, dear sir, we have many strategies from MarketsMojo. On top of these, we have Diwali portfolio, Power Series stocks,
Which we did that in March 2025.
It is becoming a challenge to follow multiple things. Your view on this? Second, what is the optimal number of stocks an investor should hold for a medium to long run horizon? Third, what recommendations result in multiple stocks within the same sector? Example, banking and metals. What is the recommended strategy for handling the sectoral overlap? Thanks. Sivaji, I completely agree. These all these strategies that we've created can be overwhelming for you to follow. These multiple strategies, because people turn around as a high risk strategy. So this was made for investors who are high risk investors. Fundamentally strong investors typically look at Mojo stocks and reliable. I know that these two strategies work very well. Seasonal strategy can be something like a momentum in a momentum market that does very well. So what we've done is that first of all we've gone as the manufacturer of these strategies. We've gone deeper into every opportunity and seen if we can create it. So once that is created, it looks like 6-7 strategies today. One way of participating in these strategies is to make a portfolio, and I said that within Mojo Infinity you can make a portfolio of that. So that is what you can do, but a lot of our people only subscribe or only go to Mojo stocks, for example, and build a portfolio from there, or reliable out there. Some people keep looking at if there is an overlap. Now, one of the other things that happens is that the stock can be in reliable as well as in Mojo stocks, so all the more better if it is in two strategies out there. So I would typically look at how many stocks are typically in 2 or 3 strategies, and that gives me more conviction. Optimal number of stocks an investor should hold for a medium to long run. It again changes as per your risk profile. I would say if you are somebody who's an aggressive investor, I would typically say maybe 8 to 15 stocks is a good holding for a aggressive investor. If you are a moderate investor, maybe 15 to 20, 24. But if you are a conservative investor, typically you can hold upwards of 20 stocks, but I would say never go beyond 30. Keep doing that, because the more you go on diversification, you will have overlaps, and you would typically have cross cancellation of returns, as they call it, where your overall returns will keep coming down. So I typically do not believe in investing in more than 10 to 12 stocks. So that is something that I would subscribe. But again, as I said, that all depends on this. The other thing that it depends on, that sometimes investors look at only stock portfolio in isolation. So they'll say that stock portfolio कितना होना चाहिए, पर उसके बाद आपके पास अगर 4 म्यूचुअल फंड हैं, तो उसमें डाइवर्सिफिकेशन क्या हो गया? मतलब फिर तो वो आपके पास 200 स्टॉक और पड़े हैं उसके. You have to start looking at mutual fund and stocks as a stock portfolio. And then when you look at, you will say that I am now exposed to 300 stocks because मेरे पास 3 स्कीम है. 3 स्कीम का मेरे पास on an average 45 stocks are there in every mutual fund scheme. तो उसमें overlap समझ लीजिएगा तो 100 तो है ही उसमें, 150. And I can tell you that 3 schemes is a guru, because people have 10 schemes that they जो भी स्कीम है वो 10 schemes का diversification we should look at as well. But we are very harsh with our equity portfolio. We say that यहाँ पे बिल्कुल perfect science होना चाहिए, लेकिन उसके बाद आप 40% of your money or 50% or sometimes 70-80% money is lying in mutual fund, which is all over the place with some 200 stocks, which can never make money, or which can never make better money than the market on a longer run basis. It can in spurts make good money. Look at this as one allocation. If you guys don't know how to consolidate all of that, I can do a webinar to help you consolidate all of that. But most of the time, my vocal cords go silent because you guys listen to it. But then when I see clients' portfolio, then I have like 20 mutual fund schemes, and then I have one portfolio. But I am very professional about that one portfolio, ke 10 stock, ke 20 stock. But I am not looking at my mutual fund holding. Ultimately, it is stocks. Whether you buy mutual funds, and I'm talking about equity mutual funds, or you buy stocks. Unless we have a residual last level impact of how many stocks I should be holding, that idea should also seep into your mutual fund holdings. Right? Now you obviously can't go and tell the fund manager ke 50 ke tum 10 kar do. Lekin what you can do is that invest in only 2-3 schemes so that you consolidate your mutual fund holdings rather than having a 15-20 scheme portfolios. I've personally seen somebody having a 50-60 schemes also, and that guy believes that this is the greatest way to make money. He only believes like that. What recommendation results in multiple stocks within the same sector? When recommendation, what is the recommended strategy for handling? I would typically go on the score side. Typically, if you see, there are, whenever there is we know, as Sunil and me were talking some time back, that for example, if you look at the PSU banks, suddenly we see 3-4 stocks that are coming as top stocks on the PSU side. The same 3-4 stocks. I would typically look at the score as a guiding factor, because score typically looks at last 3-4 years, 5 years. It doesn't just give you basis the current thing. We were also looking at another sector where we were observing that there are, in that sector now, stocks are coming in much more aggressively out there. So sometimes you will see a sector bundled with some stocks will come together, right? I would typically go on the score. Another factor that I would go is which has a higher quality rating, because typically that within the score, the quality rating I would look at, that which has a higher quality rating, which gives me a long-term fundamental view on the stock. That's how I look at it.
But the thumb rule, don't go more than 30% in one particular sector. If there is an overlapping of that, I think that's a
right.
thumb rule.
Yeah. Muthuji, dear Mohit sir, when is a complete revamp of MarketsMojo app going to happen? करेंगे सर, हम लोग प्रोडक्ट से उभर नहीं पा रहे हैं. We are going section by section and trying to improve. You know that we did a full approval improvement of the stock section. We created model portfolios infinity, wo karke abhi now it has become like a hanging product, right? So I have to first consolidate the portfolio as one, the portfolio advisory and the portfolio product as one product, which is very important. And then work on the whole app. The reason that we have not created a full app is that we are continuously adding new things. Version control becomes very difficult, and that's why we have a web app kind of a concept, so that we can easily change things on the back end. But I think maybe in a year's time we should have the new app going. And I'm saying maybe because I know that आप मैं अगली बार आऊँ तो आपकी पुरानी रिकॉर्डिंग है हमारे पास, हम सुना देंगे. You guys tell me like that. So now I'm going to put disclaimer behind all my commitments. Nirav, do you use Bloomberg terminal? I don't use Bloomberg terminal. No, we don't use Bloomberg terminal. Vijit ji, how are you, sir? Jai Jagannath and happy Guru Parab to you as well, sir. Just want to share my personal observation. Just got back from a 10-day China trip, and my perception how deeply AI, tech and EV are implemented at a grassroots level have completely changed. We are not even 5% there. We have a lot to catch up. I can come and hug you right now. Anybody believes like that, please come to office and give me a hug, because I think we are not just lagging, but we are like, I'm very, very upset and scared, and I don't have a happy feeling for our people who are creating these things. But at a country level, at a company level, we are going to be users of AI and tech. But it's really sad that we have not innovated, and we are lagging so much on that. I don't like, frankly, sitting here and using ChatGPT and Claude and all that stuff. Whenever I use these tools, I say that why the hell this country can't make this? Why is that we have to start using innovation of other countries? Why can't we make it? So you're absolutely right, Avijit. I was in US for a month. In fact, I was at Harvard doing a course for a month. And what I've seen out there is completely blown my mind, in which way the world is going and how businesses are already way ahead in implementing these tools. In fact, we used to call ourselves as one of the pioneers in technology use on financial services. Trust me, when I got there, I was ashamed, because I think I personally lacked in the visioning. Even if we started this 10 years back, we were innovators, but world is moving way much faster, and I think we don't have that exposure as a country to see how the world is changing. But it is changing very fast, and we've got a lot of catch up to do. I completely agree with you. Let's take the last question. Mohit sir, can you add AI in MarketsMojo when we can ask questions and MarketsMojo AI will answer? Yes, sir. We are creating something. You want to, and again with disclaimers of when I'm going to launch and all that, I can't tell you. But we are creating a tool. We've been working on this tool, I would say, for the last 3 years now, which will be known as Monk, Mojo Monk. It will be a monk that will answer all your questions with our engine behind it. We are 60% through. I may do a beta launch very soon with all you guys. Yeah, this is not with the current AI wave, but we started working on this tool around 3-4 years back, almost, and we are almost getting there. So this will be one of our biggest innovations in this year, and which will be much sooner than you can expect. So we are going to do this.
And we will also have AI avatar of Mohit and Sunil.
या वो बिठा देंगे आपके सामने 24 घंटे पूछते रहना आप unless actually that during COVID times, after COVID, when we set up the office, a lot of you guys came and you said that I just want to touch Sunil to see he's real, or touch Mohit to see if he's real, or these are people that we've only seen on the screen. But that time might just come that we will Mohit and Sunil will be sitting here as AI tools 24/7 for us to answer your questions. With that note, thank you so much. I hope you like this session. If you do, please write to us so that we keep getting feedback from you that should we do this repeatedly as a power series. We used to do this a lot. People used to love it. We stopped doing it in between. We got busy. But we want to now set up a very firm calendar on our webinars. So if you like certain things to be covered, please give us suggestions so that we can fit that into our schedule. We aim to be with you 6 days in a week. That is our aim. But we want to be relevant as well. So we want to be not what we feel we should be covering, but what you need. So please write to us and tell us what your needs are, so we can plan things accordingly. With that note, thank you so much. Have a great evening ahead and have a great week ahead.
Thanks a lot, everyone. Happy Guru Purab.